I want you to try something for me. Just for a moment. Detach yourself from wherever you are right now. Forget the commute, the gray sky, the spreadsheet open on your laptop.
I'm already there.
You are in Phuket, Thailand. It's late afternoon. You're on the terrace of a villa. And it's not a hotel. It's your villa.
Yeah.
The air is warm. The sun is dropping into the Andaman Sea, turning the whole horizon that ridiculous shade of bruised purple and orange.
Mm-hmm.
And there's a private pool glimmering right in front of you. It is the absolute archetype of paradise.
It is a very seductive image. I think that specific dream, the tropical escape you can actually call your own, is almost universal. It's the ultimate I've made it marker.
Exactly. But then, usually about 5 minutes after you have this daydream, the logical side of your brain just kicks the door down.
Right. The internal accountant shows up.
The accountant shows up and says, "Nice dream, but that is a money pit. That's a liability. You're going to go broke fixing a roof 5,000 miles away."
It's the classic head versus heart battle. The heart wants the sunset. The head is terrified of the mortgage and the maintenance.
So that is the tension we're trying to resolve today. We are asking, is it just a fantasy for the ultra-wealthy? Or can that villa actually pay for itself? Can it make financial sense for a normal, albeit successful, investor?
And to do that, we're doing a deep dive into a really comprehensive guide on Phuket villa rental potential.
And we should be clear about where this is coming from, because that matters.
It matters a lot. We aren't looking at some travel blogger's opinion or a generic wiki article. We're looking at data and, market analysis from Ocean Worldwide.
Okay, so for context, why should we listen to them?
Well, in the world of overseas property, longevity is really the only currency that matters. Ocean Worldwide is a luxury real estate agency based specifically in Phuket, and they've been operating there since 2004.
Wow. Since 2004.
That is over 2 decades on the ground.
Which in a developing market like Thailand is like practically a century.
Precisely. And they're led by Sandra O'Neill. She's the director.
Mm-hmm.
She and her team have guided thousands of families and investors through this exact process. So when they talk about rental yields or legal loopholes, they aren't theorizing.
They're speaking from experience.
From thousands of actual transactions.
Yeah.
Yeah.
So our mission today is to see if their numbers really stack up. We're going to look at rental yields, the terrifying logistics of managing a property from the other side of the planet, and the legal reality of whether a foreigner can even own the place.
Let's get into it.
Okay, so start with the macro view. Why Phuket? I mean, the world is full of nice beaches. You've got the Caribbean, the Med, Bali. What's a specific economic engine here?
It really comes down to the maturity of the tourism market. The guide makes a strong case that Phuket isn't just about the scenery. It's about the infrastructure of tourism.
Right.
You can't have a successful rental property without a reliable, consistent flow of humans who want to rent it.
And Phuket isn't just for backpackers on their gap years anymore. Right.
No, and that's a crucial distinction. The guide highlights this significant evolution. 20 years ago, maybe. But today, Phuket's a year-round destination. It has international airports, high-end hospitals, international schools. So yeah, there's a high season and a low season, but the flow doesn't stop.
And the source also points out a shift in how people travel. It's not just volume, it's preference.
Right. This is the hotel fatigue phenomenon. It's a global trend, but it's really pronounced in Southeast Asia. Travelers, especially families or groups, are moving away from the standard hotel box.
It makes sense. If you're a family of 4, booking 2 hotel rooms is expensive, and you're separated. You have to meet in the lobby.
Exactly. Whereas a villa gives you a living room, it gives you communal space, the kitchen, and this is the big one, privacy. The guide lists the non-negotiables for high demand, and number 1 is the private pool.
A private pool? That seems to be the barrier to entry for the luxury market.
Absolutely. If you don't have a private pool, you're competing with hotels, and you will lose. If you do have one, you're in a completely different asset class. The other drivers are, modern Wi-Fi, everyone's a digital nomad these days, and proximity to a beach or a town.
Okay, so the demand is there. People want the villa experience. But let's get to the numbers. This is the part of the guide that made me stop and reread.
The yields.
The yields. Because we're used to hearing about real estate in places like London where you're happy if you break even, maybe make 2 or 3%. What is Ocean Worldwide reporting for Phuket?
The data is pretty striking. For a well-managed 3-bedroom villa in a prime spot during high season, so think November to April, they're seeing rental yields of 6 to 8%.
6 to 8%. Just to clarify for everyone listening, when we say yield, we're talking about the annual rental income as a percentage of the property's price.
Correct. So if you buy a villa for $1 million, A 6% yield means it's generating $60,000 a year in income.
Hmm.
And yeah, compared to Western markets, it's very, very high.
The guide compares it to London.
It does. In a mature, stable market like London, typical residential yields are what, 3 to 5%?
Mm.
And the entry price is just astronomically higher. So in Phuket, your capital goes further, and it works harder for you.
And what about its regional rival, Bali? I feel like that's the direct comparison most people make.
It is. Bali is the closest competitor in terms of that tropical vibe.
Hmm.
And Ocean Worldwide notes that Bali also offers that 6 to 8% range. So on a pure yield basis, they're similar.
Mm.
But Phuket has a specific mechanism that Bali often lacks, which the guide really emphasizes, the guaranteed return scheme.
I saw this. Guaranteed returns. And my skepticism alarm bells went off immediately. It just sounds too good to be true. Buy this house and we promise to pay you money. How does that actually work?
It's a fair reaction to be skeptical. But here's how it works. It's a tool developers use to attract investment, usually for new builds. The developer or the management company guarantees you a fixed return, sometimes as high as 10% for the first year or two, regardless of whether the villa is rented or not.
So even if it sits empty, I still get paid.
In theory, yes. They're underwriting your risk.
Why would they do that? Are they just generous?
No developer is just generous. It's a marketing cost. They price it into the project. They know that once the project is established and gets reviews, it will generate that income naturally. So to get you to sign the check, they offer the guarantee to remove your anxiety.
Okay, so it's a bridge. That makes sense.
Exactly. But, and this is a huge but, you have to read the fine print. Who's backing the guarantee? Is the developer sound? This is why the guide stresses using an agency like Ocean Worldwide. You need someone to tell you if that guarantee is worth the paper it's written on.
Okay, so we have rental income, but real estate investment has two engines. Cash flow is one. What about the asset's value? Is the land actually worth more over time?
That is the other half of the equation, capital appreciation. And the guide notes that land values in Phuket have been rising steadily.
Why, though? Is it just inflation?
Partly, but it's mostly scarcity and infrastructure. Phuket is an island. They aren't making more beachfront land. Supply is limited. Meanwhile, they're expanding the airport, building better roads.
The text mentioned Bangtao Beach specifically.
Yes, Bangtao is the prime example. It's become this very upscale hub. And the source notes that properties in that area have seen appreciation of about 5 to 8% annually.
Right, so if I combine a 6% rental yield with, let's be conservative, 5% capital growth,
Yeah.
that's a double-digit total return.
On paper, yes, it outperforms the S&P 500 in many years. But, and we have to pivot here, that is only true if the property is actually managed.
Right, because a spreadsheet doesn't have to deal with a leaky roof.
Exactly.
And this is the part that stresses me out. I live in New York or London. The idea of trying to coordinate a plumber in Thailand, in a different time zone, in a different language, it's a nightmare. That's not an investment. It's a second job I didn't apply for.
And if you try to do it yourself, you are absolutely right. It will fail. The guide is very blunt about this. You cannot self-manage a short-term rental from 5,000 miles away. You need eyes and ears on the ground.
Enter the professional property manager.
It is a non-negotiable expense. You just have to factor their fee into your calculations from day one.
What do they actually do, though? Is it just handing over the keys?
Oh, it's the entire life cycle of the asset. First, marketing. You have to be on Airbnb, Booking.com, Agoda. You need professional photos. You need to answer inquiries instantly. If you sleep while a guest in Europe asks a question, they book somewhere else.
Okay, so they handle the booking. Then what?
Then the guest arrives. Someone needs to greet them, check them in, explain the weird remote for the AC, tell them where to get the best pad thai. And then during the stay, if the pool pump breaks at 10 p.m. on a Friday,
Someone has to fix it. And if you don't?
you get a 1-star review. And in the algorithmic world of booking sites, a string of bad reviews just kills your business. The guide makes a brilliant point about this cycle of success.
How does that work?
Happy guests leave good reviews. Good reviews push your listing to the top of the search results. Being at the top lets you charge higher rates. It's a flywheel. But the inverse is the death spiral. One disaster, one dirty bathroom, and your occupancy plummets. A property manager is your insurance against the death spiral.
There was a specific case study in the guide about this. The couple near Land Beach.
Yes, that was a great inclusion. It
Mhm.
really brings it down to earth. This wasn't a hedge fund. It was a normal couple. They were nervous, terrified of the money pit scenario.
So they bought a 3-bedroom villa.
They did. And crucially, they didn't try to be heroes. They hired a professional management company immediately.
And the results.
In their first high season, they hit 70% occupancy.
70% is impressive.
It's very healthy. And the key takeaway was the financial outcome. That income covered their mortgage, covered the management fees, and still left them with a profit. It moved the needle from liability to asset.
That is the proof of concept. But I imagine location played a huge role in that 70% number.
Oh, absolutely. And this brings us to the where. Sandra O'Neill and her team are very specific about this in the guide. The biggest mistake amateur investors make is buying what they like rather than what the market wants.
That is a hard pivot for people. We're emotional buyers.
Right. You might stand on a hill miles from anywhere and think, I love the silence. But a family from Sweden who's renting for 2 weeks, they want to be 5 minutes from the beach, 5 minutes from a 7-Eleven, and 10 minutes from a restaurant.
So you have to buy with the renter's brain.
Exactly. The guide highlights specific demographics. If you want the family market, which is very stable, you need multiple bedrooms, safe outdoor spaces. If you want honeymooners, you need privacy and a view.
What were the Goldilocks zones the guide mentioned?
Bangtao, Surin, and Kamala. These are the areas that have the perfect mix of natural beauty and infrastructure. They're sort of the blue-chip stocks of Phuket geography.
And the guide referenced a specific listing to illustrate this, right? The 4-bedroom Kata Sea View Villa.
Yeah, that listing is a textbook example of strategic buying. It just checks every box. It has the ocean view for a premium price. It has 4 bedrooms, so it captures the family or group market. And it's in Kata, a high-demand area. It's an asset selected for performance, not just for personal taste.
Okay, I'm starting to be convinced by the math. I get the management. I know where to look. But now we have to address the elephant in the room. And it's a big legislative elephant.
Foreign ownership laws.
Exactly. I feel like everyone's heard a horror story about someone buying land in Thailand and then losing it. So can a foreigner actually legally own property there?
It is the most common and, frankly, the most important question. If you get this wrong, nothing else matters. The Guide for Motion Worldwide tackles this head-on. The short answer is, yes, you can control property, but the method changes depending on what you buy.
Okay, walk us through the framework.
So Thailand's is investment-friendly, but they're very protective of their land. They divide it into 2 categories. First, condominiums.
Condos seem simpler.
Much simpler. Foreigners can own a condo unit outright. It's called freehold. You get a title deed with your name on it, just like in the US or UK. The only rule is that in any given building, foreigners can't own more than 49% of the total floor space.
Okay, so if the quota is open, you buy a condo, you own it, done. But we're talking about villas. Villas sit on land.
Correct. And under Thai law, foreigners typically cannot own land directly. This is where people get confused. But there are very established legal structures to handle this.
What are the workarounds? Or should I say structures?
Structures is the better word. The most common is leasehold.
Explain that like I'm 5.
Okay. You buy the building, the bricks and mortar in your name. You own the house. But the land underneath it. You sign a long-term prepaid lease with the landowner. Usually it's for 30 years, and the contract typically includes options to renew for 2 more 30-year periods.
So it's effectively a 90-year lease.
Exactly. It gives you secure legal rights to use the land without technically owning the dirt. It's a very recognized legal instrument.
And the other option?
The Thai company structure. This involves setting up a legitimate Thai limited company. The company owns the land, and you control the company.
That sounds a bit complicated, maybe a bit gray.
It is more complex, and it requires strict compliance. You can't just set up a shell company anymore. The government's cracking down on that. You need a proper lawyer to set it up correctly so it stands up to scrutiny.
This is why the guide basically screams, do not do this yourself.
Absolutely not. You do not want to be figuring out Thai corporate law using Google Translate. You need a partner like Ocean Worldwide who has been navigating these exact structures since 2004. They know the difference between a secure structure and a shaky one.
There was also a little cherry on top mentioned in the legal section about visas.
The visa bonus. It's not automatic, but yeah, it's worth knowing. A significant property investment can sometimes be used to support applications for long-term visas, like retirement or investment visas. It signals to the government that you're committed to the country.
Which makes it easier to actually enjoy the property you just bought.
Exactly. Which brings us to the final point, really. The lifestyle factor.
Because at the end of the day, we aren't just buying a stock ticker. We're buying a house with a pool in paradise.
This is the dual benefit. We talked about yields, capital growth.
Right.
But the third return is emotional. The guide calls it the sweet spot.
How does that work?
It's the balance. You
Yeah.
don't rent it out 365 days a year. You block out the calendar for yourself, maybe January and February when it's freezing at home. You go, you live the dream. Then for the other 10 months, you put it on the rental market.
So you get the tan and the property pays for its own upkeep.
Precisely. And it changes the psychology of ownership. It stops feeling like an indulgence, oh, I shouldn't have spent this, and starts feeling like a smart asset that you just happen to get to enjoy.
And let's be honest, there is a flex factor here.
The prestige. Oh, absolutely.
Being able to say, I'm heading to my villa in Phuket for the winter. That is a sentence that carries some weight.
It's the ultimate status symbol. It says you've succeeded and you have the freedom to live globally. It's wealth as freedom, not just numbers.
So we've unpacked a lot here. We've gone from the dream of the sunset to the math of 8% yields to management to Thai law. If we zoom out, what's the big takeaway from this deep dive?
I think the summary is that Phuket offers a rare convergence. You have a mature tourism market providing the cash flow. You have developing infrastructure providing capital growth, and you have the lifestyle element.
Okay.
But, and this is the critical caveat, it is not a passive game.
You can't just buy blind.
You cannot.
Yeah.
You need to understand the location, you need professional management, and you absolutely need the right legal structure. If you get those three hows right, the profit, it follows.
It really challenges the definition of wealth, doesn't it? We usually think of it as a number in a bank account, but listening to this, I'm thinking maybe real wealth is having a home that pays for itself while it waits for you in paradise.
That's a powerful way to put it.
But as we said, do not try to do this alone. Expert guidance is crucial.
Absolutely. If this conversation has piqued your interest, you need to go to the source. The guide we use today came from Ocean Worldwide. Again, they've been the luxury agency in Phuket since 2004.
And we mentioned Sandra O'Neill earlier. Her team has literally guided thousands of investors through this. They know the pitfalls, and they know where the gold mines are.
If you want to see the listings we talked about, like that Kaida Sea View Villa, or just get some advice, you can find them at oceanwwp.com.
That is oceanwww-p.com. Go take a look. Even if it is just to scroll through the photos and, torture yourself a little bit.
We won't judge.
Thanks for listening to this deep dive. We will catch you on the next one.
Bye.